What a day and time it is these days on Dalal Street. We have almost 25,000 on the Nifty. The budget is now a forgotten event. A bit of a hurdle that we faced on capital gains tax has been digested, and we've moved higher. Sanjay ji, is this breakneck speed worrying you a bit, or is this a result of excessive liquidity on Dalal Street? Which side of the equation do you stand on?
As far as the budget and its impact on the market is concerned, I will say that we should not take this development very lightly. That the market simply shrugged the impact of the rise in the short term and the long term capital gains tax and has chosen to move ahead in its own stride. I think what it is trying to tell you is that the fact that there is such a large under ownership of equity in India, that the existing equity owners realize fully well that if the STCG and the LTCG hike is not going to dampen investor interest, then they are not going to let go of their equity they are currently holding to the prospective investors coming into the market very cheap. I think therein lies the India story. We need to accept the fact that gone are the days when you could see the market bottom out somewhere around 15 times price earning multiple, which is what used to happen historically. Now, I think with the gush of liquidity, even under an extreme stressful situation, I would be surprised if the market goes below 17, 18 times forward price earning multiple in terms of support. So, given where we are today, that support level does not seem to be very far away. At the same time, if you look at the upside potential of the market, there is a rational upside potential and there is an irrational upside potential and there is an exuberant upside potential. So the rational potential of the market, I would say, would be say 22 times forward earnings of at best FY26, which is where we should peg our expectations from the Nifty return. And anything above that would be irrational, and above that level of irrationality would be the euphoric or the exuberant level, on which you and I we have no control. It is a function of the liquidity coming into the market and the events and the pure greed that will bring people to the market. But coming to the number that I was trying to get to is that what is the rational peak that for the market? I see that at 22 times forward earnings of FY26, and I take Nifty EPS as 1290 rupees, you can round it up to 1300 rupees. That level is about 28,500. So from where we are today, we can still see a 12% return from the markets, which on a long-term basis, if you see, is a very healthy return. It is quite possible that in the intoxication of the heady returns of the last couple of years, people may find this return to be relatively low. But equity returns of this magnitude, I think is quite good.